Hello everyone, this is the third lecture inside of the model series. If you haven't watched the previous two lectures, go back and watch them first before starting this one. Entry models are probably the least important out of this whole series, because all I'm going to be sharing to you today is just patterns. You do not want to become a pattern trader. Just because you see a breaker form, a fair value gap form, an IFVG form, that does not mean that you are in line with order flow in the slightest. So make sure that if you haven't watched my previous two lectures, watch those now and come back to this video. So these are the things I'll be covering today. I'll be covering our market maker models. So I'll be covering our low risk buy or sells, first stage distribution and second stage distribution. Secondly, I'll be talking about breakers. Thirdly, I'll be talking about a unicorn model. And lastly, I'll be talking about how to make your own entry drill. So with our topics covered, let's get into the video. Right, so as I said earlier, I'll be covering our market maker models first. As you can see here, we start off with a consolidation. Market maker models always start off with an original consolidation. After that, we drop down and then we come back up into this right here. Now, does anyone know why this low is important? Well, as you can see here, we actually took out this high. Why is this of any importance? Well, on this high, we would have actually had, an SMT, meaning that a highly correlated market failed to take out this high. Now, because we came up, swept liquidity from above this high and dropped below this low, this turns the candle that formed this low into our breaker. Right here is our breaker block. After we retrace back into our breaker block, this breaker block is our low risk sell. This is our very first point in our market maker model where we can accumulate our orders. Now, if we carry on down, as you can see, what have we just done? We displaced away from this breaker, and in doing so, we created a SIBI. This SIBI will align with this low right here, which is now a mitigation block. This cell right here is our first stage distribution. This is our very second point in our market maker model where we can start accumulating our orders. Now, if we carry on, as you can see, we will continue to displace down and retrace. Where we retrace into a SIBI that we formed on this side of the curve. Now guys, what would this be? This is our second stage distribution. This is our final stage in a market maker model where we have the chance to accumulate orders. After this high is formed, I'm expecting to hit our drawn liquidity. So after we retrace back up into the SIBI, I'm expecting one more expansion leg down that hits our drawn liquidity. Once our drawn liquidity is met, we are now waiting for a reaction off this drawn liquidity. As you can see, we come up, we drop lower one more time, and then we displace up. Why am I looking for this exact thing to happen? Well, if you look at a highly correlated market, this is exactly what it will do. As you can see, although this market reached our drawn liquidity, our highly correlated market failed to do so. This is our higher time from SMT. This is what's framing my setup. Now, if you look at these lows right here, look what's happened. We formed SMT on these lows right here. This SMT is my confirmation SMT. This is my internal SMT. Once this SMT forms and we displace above this high, which by the way formed inside of a SIBI, making this an intermediate term high, once we displace above this high with a BISI, what am I now expecting to happen? I'm expecting the market to drop down into this BISI that we formed, into this breaker, and into what's now an IFVG. If you draw out this IFVG, look what's happened. This fair value gap, this IFVG, and this breaker are now all lined up. This is what's called stacking PD arrays. If you see this exact thing happen in the marketplace during our macro time, this is a super high probability setup. I am expecting market to react off of this high. This is also a low risk buy. After we retrace back into this BISI, I'm now expecting an expansion leg up. After we displace above this high and this SIBI, I'm now expecting a retracement. What am I expecting a retracement into? A BISI that we formed during the expansion leg to the upside. This BISI should now hold. Why is this? Because the lows on this side of the curve should now act as support on price. These lows right here should not be broken. That right there is a little gem for you. Now after we see the left side of the curve acting as support for the right side of the curve, what are we now expecting? We're now expecting another expansion leg to the upside. We expand up here. We will make a BISI and retrace down into where? We will retrace down into the high that formed on the left side of the curve, inside of our IFVG, and also a BISI that we formed on the right side. It will never look this clean, but believe me, this happens every single time. After we retrace down, this is our second stage distribution. Now after this, we will see one last distribution. Once we distribute up, we're now targeting our original consolidation. Now look at this. Now once this original consolidation has been taken out, I'm looking for one of two things to happen. We will either drop down, use that high as support on price, or we will drop back down, displace below, and create exactly the same thing as happened here and here. This will now be our original consolidation for the next side of the curve, and our drawn liquidity would be here. So this is our reversal model. If we continue to see our original consolidation on the left side of the curve act as support on price after we displace through it, I'm now expecting a continuation to the upside. Right, so now we're going to be talking about breakers. Breakers are just a pattern in price. However, they go much deeper than what you can just see on the charts. So I'll explain what a breaker is in two ways. You can either see it as a high, a low, a higher high, and then a lower low for a bearish example. This low right here forms our breaker. This is what a breaker is. Now, for a bullish example, what we do, we take a low, a high, we make a lower low, and then a higher high. This high right here is our breaker. Now, the second way I can explain it to you is the breaker is the order block that sent price higher for a bearish example. So if we zoom into this bearish example, an order block would have formed right here. This order block will turn into a future breaker. So if we formed an order block right here, as you can see, this order block pushed price higher above this high, taking out liquidity. Now after price rejected from this high and we displaced below this low right here, what am I now expecting? I'm now expecting price to retrace into this old order block, because this order block has now turned into a breaker. Now for our bullish example, our order block would have formed right here. This order block pushed price lower below this low to sweep liquidity. After we reject off of this low, make SMT right here. That is very important, guys. We need to make SMT on these lows. After we form SMT on these lows, we will displace up and close above this high right here. After we close above this high, I'm now expecting a retrace back into this old order block. Why? Because we turned it into a breaker. Now, I think it's very important to understand why price patterns work, and not just because, oh, okay, I see a breaker, now I'm going to enter on this breaker because it's a breaker. No, you need to go inside and see how and why this breaker works. Now, I think the best way for you to learn this is going into your own charts, making your own studies, and zooming into your own breakers. Because once you see what happens inside of these breakers on the lower time frames, you will understand why they work. Because a breaker isn't a breaker just for the sake of it. There's something inside of that breaker that makes it work. Same with inefficiencies, same with order blocks. And let me tell you guys, it is pretty much the same thing in every single price pattern. Once you find what this thing is, you can base SMRs to exact price levels. Anyone that didn't watch this part of this video missed out on a real gem right there. Because I just dropped something big. Anyways, now moving on to a real chart example. As you can see right here, guys, our market dropped down and we started consolidating. However, where did we form our intermediate term high? This candle formed our intermediate term high. So, why is it an intermediate term high? Because we formed it inside of this SIBI right here. Any high that forms inside of an imbalance turns into an intermediate term high. Now, as you can see, this is now also an order block. After this order block gets formed, price drops down and rejects off of this low and this low. Now, what am I expecting this order block to become? A breaker. Why? Because we closed above this volume imbalance, and now once we close above this SIBI, this is very important, guys, you need to close above this SIBI. Once this SIBI gets closed above, this is our market structure shift pattern. Once you displace up with a BISI above this intermediate term high, above this SIBI, this is our super high probability market structure shift. So as you can see, we run up and we never actually retrace down back into this breaker. That is not important for the moment, and I'll tell you why. We run up higher, reject off of this high, and drop back down into this exact level that we marked before. Is it a coincidence? No. Why these price levels work, not just in the immediate short term, but also if you draw these price levels out in time, is because if we form a BPR inside of a breaker, these price levels are the price levels that IBDA refers back to. I just dropped an absolute bombshell right there. This lecture has been full of gems. So let's go over again why this was a high probability setup. As I said before, we dropped down and made an intermediate term high. After market drops down again and displaces above this SIBI with a BISI above this intermediate term high, this has now turned into a breaker, and this is a high probability market structure shift pattern. Now after market drops down into this very specific price level right here, look at the reaction, guys. Straight away, not even a close below. As you can see, this is our low risk buy. This right here would be our first stage accumulation. This right here would be our second stage accumulation. This is how simple it is. Once you start seeing this, this is our unicorn model. This is so high probability if it forms inside of our macro and if it lines up with high time frame institutional order flow. This is what I use and this is what I trade off. You don't need anything else, guys. If you just use this and you have good psychology, you've already made it. However, people don't want to wait for the high probability setups to form. People want to take so many setups. That is not what you want to do, guys. You just want to take the higher probability setups because It's the quality that counts, not the quantity. If I started taking random trades, gambling, trading every breaker that I see, I will not be profitable. You need to know where all the flow is going, what our drawn liquidity is. Then, that is when you form your trade idea. You need to have a plan set before it happens. You need to be seeing what's going to happen before it happens. Right here, if you're expecting this exact thing to happen, that's when you take it. If you were not expecting this to happen, you do not take this trade, guys. If you're expecting for us to keep going lower, don't take this trade, no matter if it's a unicorn, no matter if it's anything else, because this is just a pattern. If you just trade patterns, you're just as bad as the retail traders. Anyways, now that we've covered market maker models, breaker blocks, and unicorn models, I'll talk you over how to make your own entry model and flowchart. So the software I'll be using for this is Miro. I'll leave a link in the description below. I'm not affiliated with them in any way, so I'm not making any money off this. You can use any software you would like, I just like to use this. So for your own trading model, guys, you need a step-by-step guide on your entry pattern. If one of those things does not happen, you do not have a trade. If every single one of those things happen, you take the trade. You put your stop loss where it needs to be. You put your TP where it needs to be. You need to be disciplined with your setups. If your exact model does not play out, you do not take the trade. So this is how you make your own flowchart to make your own trading setup. First thing you want to do is make a little box and type in there the very first thing you want to happen. So for me, that is a run on liquidity. After I get that run on liquidity, what am I looking for next? Well, what I'll do, I'll just click on the box and press that little arrow there. So now as you can see, I'm starting to make a flowchart. What am I looking for next? I'm looking for S&T. What do I do again? Make a new box. Now, what is my next thing to happen? We need to be inside of our time of interest. As you can see, I'm already starting to make a flowchart. This is my step-by-step guide on my entry. Now, once we're inside of our time of interest and all these things happen, what am I wanting to do? Enter. And then to make it more clear for myself, what I'm going to do is add little post-it notes here saying unicorn. Time of interest. What's our time of interest? XX 45 to XX 15. Now, you can do this for all of this. You can say where you want your S&T to form, what type of liquidity, where that liquidity should be. You can change this for POI. You can fully customize this. You guys make your own entry models. Once you guys have made your step-by-step guide, all that matters now is just your psychology. Nothing else matters. Your psychology is the only thing holding you back. Because I promise you, if you just backtest this very simple thing that I've just showed to you, this is already profitable. Do you see how simple this is? However, people are not willing to wait for that high probability setup to form. Alright, well, with that guys, I think I'll wrap it up for this video. I have a free Discord down in my description if you want to join that, and all my socials are linked below. I hope everyone has a great day, and goodbye.